Okay, in this video, I'm going to help you provide a little bit more structure to a particular video that I saw. It was actually a link that was sent to me by one of my subscribers, and the video was called Best Forex Trading Strategies That Work. Now, this video was not created by me. It was by somebody else who I guess they teach people how to trade. They've got offer some services. Guy says he's been around for quite a while as a Forex trader. He has a big channel. And when I watched some of the videos, and I was asked some questions. I wanted, one of my subscribers wanted my feedback on a particular video that was intriguing to him. And it was, again, titled Best Forex Trading Strategies That Work. And he watched it and he said, what do you think of this? And the first thing that I thought when I watched this video is that the person who's sharing this information, I believe he calls himself a doctor or something, and I don't personally know the guy. I don't know how long he's been trading, but the reason that I'm making this video is that I want to help you provide some structure to some of the techniques inside of the videos that you watch on YouTube, or even, wherever it is that you watch it, whether it's somebody else's website. I want to help you provide some structure because this is actually what I experienced when I first started trading. When I first started trading, I watched a lot of videos on people's websites, and the information that they gave me was very, very vague. It was almost about as vague as reading it on a blog or a book. You didn't have all the details. You didn't know when to get in, when to get out. And that's what happens with a lot of trading systems and trading courses. They don't tell you precisely when to get in and when to get out. And I want to show you how to do that. I want to show you how to provide some structure to some of these concepts that you see on these YouTube videos, on these channels from these other guys who teach how to trade, but they don't tell you what to do with the strategy. They don't tell you how to make any money from it. So they're giving you these textbook ideas. Now in this video, the guy was talking about trading a double top. What I'm showing you right now is the euro dollar. And in this video, Best Forex Trading Strategies That Work, that's the title of this video on YouTube. Again, I did not make that video. It was made by somebody else. But the guy does not show you and doesn't tell the viewer exactly when to get in, where to put your stop loss, and where to take your profits. And that's the biggest challenge. That's what really makes me mad, is that when these guys make this video, they sound like they know what they're talking about, but they don't show you how to make any money off of it. And in my videos, I'm going to show you my trading strategies. I'm going to be totally open and tell you exactly where to get in, what time frame to use, which indicators to use, what it needs to look like. And if it doesn't look like what I show you, I highly recommend don't do it at all. That's what I do. When I look for some of these techniques and these signals that I use, these strategies that I share with you in my videos, if I don't see it, if it doesn't look picture perfect, if the confirmation isn't there, even if I can tell that price will probably move down to a specific level, like a certain price target, if it doesn't look right, if I don't have confirmation, and if by taking that trade I would be breaking my rules, then I won't take it. I won't take the trade. Because if I take the trade and it fails, then I've got nobody to blame but myself. All I can do is control my thoughts, my behavior, and to make sure that all of the trades that I execute, that's where I exercise discipline. Every trade that I execute has to be according to my strategy. If it's not, then I'm going to obviously end up with bad results. I'm going to end up with bad trades. And that's not the way to make money consistently. So this guy's talking about double tops in this video. And he starts talking about it on a 1 hour chart. Well, let me show you the 1 hour chart. And I found a double top. So this is the same area right here that we're looking at. So that spike high right there goes as high on the 1 hour chart for the euro dollar, goes as high as 1.1236. And then we'll go over here to the 30-minute chart and you can see the same thing. The high, I'm sorry, back over here, 1.1236. That's that spike high on a 30-minute chart. And you can see on a 30-minute chart, obviously it's going to provide us with 2 candles. We go back over here to the 1 hour chart. That's just the one candle, the 1 hour candle. That's it. But it provided a temporary resistance level in here. And in the video, the guy's talking about how to short this and how to make that you would make money. He doesn't tell you how, but he says that this would be a double top, and it's showing you the fact that no candles closed above that resistance point. It's showing you that the market has rejected these price levels. And he draws some boxes in here, and with that high up there at 1236, and then the high of that 1 hour candle right there is at 42. So he's talking about the fact that it's rejecting this area. Okay, well, what area? When I watch these videos, I think, well, this is so vague. How is a new trader or a viewer who doesn't really have a lot of experience with what the guy's talking about implement this? How do you deploy a strategy like this? How do you know when to get in? What do you do? So in this video, I want to show you an idea. I want to give you some ideas. This is what I do personally, and this is actually some of the techniques that I use. The Tech 1 trade, the HL30, you've probably seen those on my channel or on my website. So this would be a Tech 1 trade if I'm going to execute this on a 1-hour chart. I see the high. I see the, the high that it printed here at 1236, and I see that these candles are not closing above that resistance area. That's good. That's one of the strategies that I use, and I want to make sure that nothing's closing above the high. So one of the things that I recommend doing if you're looking for double tops and you're going to be trading this guy's strategy, this best Forex trading strategies that work, the title of his video, and he's talking about looking for reversals. Yeah, you want to notice that none of the candles close above that resistance. That's a great starting point. But if you can look at the 30-minute and the 1-hour chart, you're going to get a better entry. You're going to get more information. I mentioned that I use the CCI. The CCI, I set it at 14 on a 30-minute chart and 14 on a 1-hour chart. So again, we're using the 30-minute and the 1-hour chart to make sure that there is no 1-hour candle that closes above that resistance. Now, divergence to me means here you've got a price swing high, or just looking at the CCI, and you'll notice that it's starting to slow down. You're starting to see that it's making lower lows here as price is spiking up or approaching this resistance area and clearing it, but not closing above that resistance level. You see it here on the 1-hour chart. You see the divergence here in the CCI. And let me go to the 30-minute chart. Okay, so here we've got the 30-minute chart, euro dollar on the left side, and the 1-hour chart here on the right side. All right, this is that same resistance area right there. So again, we've got the same resistance area right here. Here's the 30-minute chart. That's the spike high. You'll notice that it took 2 candles to form that resistance. And then over here, it took just 1 candle. This is the same area right there. So again, watch them side by side. But again, what we're doing is looking for the CCI. That's the first thing that I want to see. As price is approaching this resistance, I want to make sure that I'm watching the 30-minute and the 1-hour chart. The 1-hour chart, I do not want to see a candle close above that resistance before I think about selling it. I'd like to see the 1-hour candle close. But again, as it's making this new high here on the 1-hour chart, you can see the divergence here in the CCI. Notice the divergence here. It's making a new spike high in price, but the CCI is still making new lows here. The same thing here on the 30-minute chart. Here's the resistance area right there. Price makes a new high here on the chart, on the 30-minute chart, but you'll see that it's printing and showing some divergence here on the CCI indicator. That's the first thing I want to see before I start considering selling this. Now, the guy doesn't really talk about, he talks about some candle patterns, but he doesn't talk about specific candle patterns. Every time you look at a pattern or every time you look at an example, it's not always going to look exactly the same way. If you watch a video, let's say even one of the ones that I show when I'm doing some of my lessons in my videos, it's not always going to do the same thing. One of the things that I do is, again, first look for the divergence in both the 30-minute and the 1-hour chart. Now, I want to see a bearish reversal candle. Here's my spike high on a 30-minute chart after I see the divergence. So now I'm starting to think that maybe it's going to hold here and this resistance level is going to hold, and that's going to, I see the rejection in price here. That's what he's talking about. So in the video, this other guy. So from here, I want to see a reversal candle. So what is a reversal candle? And I try to make things really simple for my students and for myself. I'm looking for evening stars, morning stars, bullish or bearish engulfing candles, of course, depending on which direction you're trading it in. Now, you can get a little more advanced, like the dark cloud cover, piercing patterns, things like that. I recommend, if you're new to candle patterns or you're still struggling with these ideas about resistance and selling things, when support or resistance, like if resistance fails and you're going to see a reversal, stick to the basic picture perfect candle patterns. If you're not sure, stay away from it, leave it alone. Don't touch it. That's what I do. If I'm not sure, I just take my hands off the mouse. I know how hard it is. I'm using the 30-minute and the 1-hour for confirmation. The 30-minute will usually get me into a trade a little bit sooner in most cases when I get the reversal candle pattern, but I have to see the divergence in the CCI on both the 30-minute and the 1-hour chart. And I want to make sure that the 1-hour candle does not close above that resistance. So here, it does not close above that resistance, and then over here on the 30-minute chart, it prints the engulfing reversal candle, that evening star pattern. That's my entry right there. That's my entry. So now you can see how I'm piecing together all these components of confirmation. It gives me more confidence in executing the trade. Now, once you get into the trade, this is something else that the guy didn't talk about. Where do you take profits? My biggest mistake when I first started trading, even when I could find opportunities like this, is that I would get into a trade and number one, I didn't know where to put the stop. And number two, I didn't know where to take profits. I would end up holding too long and then the whole thing would reverse against me. Now, obviously, if we look over here on the right-hand side, this 1 hour chart, we can see what happened to the trend after that, the resistance level failed. It trended and moved a lot lower. But it doesn't always move a lot lower. What if, and sometimes when it does, come back down to support, bounces and goes back up again. So you've got to lock in profits. You can't sit here and trade off of a 30-minute and a 1 hour chart and hope for these 100, 200, 300 point moves. Yes, sometimes you'll be lucky enough to get into it and end up being in the right direction where momentum and everything just goes your way. But if you don't know what you're doing and you're lucky enough to get into that, you're not going to be able to repeat it. Now, one of the ways to be able to continue to stay into a trade where you see the trending move like this continue here on a 1 hour chart, if you were to get into it here on a 30-minute, at that point, I would have to switch to a 4 hour chart to make sure I see a bearish engulfing candle. And then I'd have to look at the daily chart to make sure that there's support far enough away that I could expect a profit target like that. There's all kinds of things. But if you're going to day trade it, this is what I'm talking about. I'm talking about day trading this, where you get in and get out, usually within the same trading session or maybe within the same day. So where do you take profits? We get into a trade on this reversal here. The 30-minute chart will usually put me into the trade a little bit sooner. Here, that would be on the close of that candle. Again, we have all the divergence here, so the confirmation is there. We also have the reversal candle pattern and the fact that it didn't close above resistance. So these two time frames right here help me with confirmation. The entry would be on the close of that reversal, that evening star pattern. That is 1.1228. So from 1.1228, right down here, this is the start of the new day. Here's a level of resistance, support right down here. Let me go ahead and go over here to this time frame. 30-minute chart. Here's just a pocket of resistance right here at 1.1200 or 1203. That's the 1200 psychological level. That's a major psychological level. If you're day trading, yeah, it might blow right through that, but it could also come right down to that level, bounce and go right back up again. That's also a possibility. No one ever really knows. Again, if you're day trading and you get into a trade here like this at 28, you want to make money. You want to make money every day, every trading opportunity. The psychological level would be the 1.1200 psychological level. Now, sometimes you'll notice that price stops just a few pips before a major psychological level and bounces. Sometimes it'll do that. Let's take a look at this one here. I think this one went a little bit lower. Actually, that went as low as 2. Sometimes they'll stop right there and then turn around and go right back up, and you're frustrated and you're thinking, well, I was holding for 1.1200 and it didn't hit 1.1200. It only went down to 2. Well, I recommend that if you get in at 28 and you're up 25 pips and you're only looking for the major psychological level here and you're only thinking you're going to be making 20 to 25 pips anyway, take it. Don't hold out for every single last pip. But in this case, obviously, if we look over here to the right, it continued a lot lower. One of the ways to maximize a move like this is to scale out of the position. So when you get into the trade, you're prepared to lock in some profits here at this psychological level. Now, that's not a big move anyway. From 28 to the 00, that's only 28 pips, not including the spread. That's not a big move anyway. So I would recommend locking in profits and then setting the second half of your trade at a break-even stop and then waiting to see if the trend continues. In this case, it did, and you would have done really well. But that's what you do. You want to find a target when you get into the trade. Before you get into the trade anyway, you need to know what you're going to do. Where's your stop loss? On a trade like this, I would consider putting my stop loss above the price swing high, that spike high. Some people will use 2 or 3 pips above that high. So again, I would put my stop just a few pips above that high. That would tell me if it turned around and blew right out, the trade's wrong. It's going to fail. I'm not going to make very much money anyway. Or maybe the 1 hour candle at that point would turn around and print a 1 hour candle above that resistance. And that would give me confirmation that my trade was going to fail. These are just some of the things that you can consider as far as where do you place your stop? How do you know when to close your trade? Sometimes people will close their trades too soon. They're not using the right stop. So by using these two time frames, and again, one of the reasons why I'm talking about the 1 hour time frame is because this gentleman in this video who was teaching people how to do this, how to trade a double top, he didn't tell you when to get in, where to get out, where to take profits. He was using this example on a 1 hour chart on the euro dollar. I do pretty much the same thing. I watch the 1 hour chart. I look for entries on the 1 hour chart. I look for entries on a 30-minute. One of the other reasons why I use a 30-minute and try to get in on a 30-minute is that it will give me an earlier entry as long as I have the confirmation that there is a reversal happening, taking place, which I showed you how to do that. Watch the beginning part of this video and you'll see how I was able to determine that the reversal was likely to happen because of the divergence and the fact that the 1 hour candles didn't close above that resistance level. So this is pretty much the same example. It doesn't look exactly the way he shows in his video, but it's basically the same idea. And again, lock in profits, take profits. Just follow some of these ideas. Psychological levels. I mentioned psychological levels to use as targets inside of a consolidation range like this if it looks a bit too choppy. If you're selling this off of resistance and you see another support level down here, you might want to consider locking in some profits before or right around when it hits that level. Start looking for psychological levels at this support level. Take your crosshairs. Try to do some, do a little bit of work. Look for, what psychological level is this support level close to? Well, it was close to the 1.1200 psychological level. Other psychological levels that I target are the 50. So it could be 1.1250, 1.1220, 1.1280, and then again, the psychological level, the double zeros. Those are psychological levels. You can trade those. You can trade these reversals like this to some of these psychological levels if it makes sense. Now, again, getting in here at 28, well, 20 is a psychological level. There's no reason for me to trade it right into 20 when I'm getting in at 8 with a spread. That's not very much money. That's like 3, 4, 5 pips. That's not, I wouldn't even do that. I would definitely be targeting this psychological level down here, especially if this was a rejection at this resistance level and it failed. There was a lot of selling and I could see all of this confirmation here. Now, another thing that you can do, again, if you have the space on your charts, is to watch the 4 hour chart. If you watch the 4 hour chart in addition to trading off of the 30-minute and the 1 hour chart, you're going to get even more confirmation because as this is happening, as this trend is moving, it's possible that the 4 hour candle might close on your chart printing a bearish engulfing candle, something to that effect. I'm not saying it's going to be exactly like that, but it might give you a clue. It might give you a signal that, yes, you can continue to hold on to this trade. Look at this. This thing kept trending all the way down here to 1.1133. It kept moving a lot lower. So by looking at the larger time frames, you might get the opportunity to hold on to it a little bit longer. But I recommend locking in profits because initially you don't know what it's going to do if it's trading inside of a consolidation range. You want to protect yourself. You want to make some money when you exercise a trade, when you execute. You want to lock in some profits and you want to be using the right stop loss. Now, if you've watched some of my videos like the HL30, this is not an HL30. So you would not use the 20 pip stop loss on a trade like this. You have to be using the appropriate stop loss. I hope this information helps you. And if you don't trust yourself executing, you're still fearful, I understand. I know what it feels like. I did the same thing. I was afraid to execute my next trades because all I did was lost a bunch of money in the beginning of my trading career. I didn't know what I was doing. If you still don't have the confidence to execute your own trades, I can help you. You can use my trade copier. My trade copier service right now, the Platinum service, my Platinum automated Forex signal system will execute these trades for you. Now, this is very different than my previous trade copier service. It is a trade copier, but this Platinum service gives you 3 to 4 times more profits. These are the same profits that my students earn in my chat room. These are as a result of me calling out these trades and earning approximately 400 pips on average every single week. We never have a losing month, ever. And you'll never have a losing month if you use my Platinum Automated Forex Signal System. Use this Platinum Automated Forex Signal System. You will not regret it.